Hello, ladies and gentlemen, boys and girls. In this video, we are going to talk about Table 1A3. We are going to talk about Table 1A3 of Section 1 of JLT report. JLT is Joint Liquidity Template. So I won't waste time. Keep your eyes and ears open. Don't let distraction derail you from this path. So, okay, guys, focus here, focus, and let's cover this thing in just 5 minutes. What are we going to cover? We are going to cover line 230 to 280. Line 230 to 280. Line 230 is for total central bank funding from euro system and non-euro system. 240 is for euro system central bank funding. It includes MPO and MLF and ELA. Whereas, so an MPO, MLF, and ELA, MPO is for 250, MLF is for 260, ELA is for 270. Last, then we have 280. 280 is only and only for non-euro system central bank funding. This is, let's cover this thing. This item first is, this is the most non-serious. Here we can report business as usual items also, which is not under any emergency or liquidity crisis. So bank can enter on their own initiative as an alternate to use interbank funding, interbank deposits, this non-euro system central bank funding option. So we can report here. But if this is going bouncer, then that's, don't worry. We are going to cover in detail what this MPO, MLF, ELA is. So, okay, I have just given a high overview, but now we are going to deep dive into Table 1A3. Table 1A3 is for CBF. CBF is central bank funding, and central bank funding can be divided into two parts. One is 3.1, 3.2. 3.2 is mainly for non-euro system central bank funding, and 3.1 is for euro system central bank funding. In case of euro system central bank funding, we are going to report 3.1.1 and 3.1.2. 3.1 is covering two items, MPO and MLF. 3.1.2 is covering ELA. That's it. And we can also add lines here. This is let me change the color first. It is going to spoil our 230, 240, 250, 260, 270, and 280. Ta-da! Finish. Let's focus on this MPO, MLF, ELA. Once these three terms are clear, then Table 1A3, we are going to understand Table 1A3 in completely. And I don't think we would have any doubt after covering these three terms. So what to cover first? We can cover the most critical or most serious item, which is emergency liquidity assistance. We are going to report emergency liquidity assistance under here 270 line. So and it will come in the picture only when when the banks are in a serious trouble. ELA, as the name indicates, emergency liquidity assistance. It is a safety net by national central banks to troubled banks who are facing immediate liquidity challenges. It helps banks to maintain their stability in the financial system by preventing a sudden and disorderly collapse like which happened with SCB Bank. Which and if we know, if there is a collapse of a bank, it could have broader economic consequences. To stop this, to prevent this facility comes in the picture. ELA by national central banks to troubled banks. We can break down in simple terms also. Sometimes bank may face a situation where they don't have enough available liquidity in hand to meet their immediate needs, like paying off depositors, covering their obligation. This could be due to various reasons such as sudden rush of withdrawal or loss of confidence in the bank. SCB Bank, same thing happened with them. National central bank then steps in. When a bank in the eurozone finds itself in such a tight spot, it can turn to the national bank for help. And national bank is a part of euro system, so it includes all the central banks in the countries that use that euro. that uses this euro. ELA is a financial lifeline provided by NCB to the troubled bank. It involves central bank offering emergency funding to the struggling institution to help to navigate through the immediate liquidity crisis. And then in that case, special arrangements are going to be banks are going to enter into special arrangement. There are going to be a special balances and checks. ELA is often considered exceptional measure and is provided under specific condition. The central banks may impose certain terms and conditions, and assistance is usually meant to be temporary. It is bit like a short-term loan to help troubled bank get back on its feet. Singles oversight, there are going to be a supervisory oversight. While ELAs provide crucial support, it's not a blank check. The provision of emergency fund is usually subject to close scrutiny and supervision. There are checks and balances to ensure that these funds are used appropriately, and there may be conditions imposed to address the root causes of liquidity problems. So this ELA is not a usual item. It is an exceptional measure. So this only those banks are going to report here which are in a deep trouble. So this should be our out of picture. Let's cover MLF. What is MLF? Again, a tool by ECB as part of their monetary policy. So these both are under their monetary policy, and this is like a financial safety valve that commercial bank in the eurozone can use in emergency. This is for emergencies. This is for emergency. This is for extreme situations. Man, this is usual. This can be usual. So we banks there can be reporting here, and when banks are reporting in this part 3.2, which is line 2 road 218, then it can be seen as not a very serious deep trouble situation. So but here 260 270 there are problems. There are simply problems if we are reporting under these lines. So it provides these facilities, marginal lending facilities. MLF provides quick access to funds but at a higher cost, serving as a tool for central banks to manage short-term interest rate and encourage responsible financial behavior among banks. And how it works? Simple. It works like let me stuck pen. Okay, think like a MLF is like a sort of emergency lending option for commercial banks. When a bank urgently needs funds but can't get them through regular channels from interbank, then it can turn to the MLF. However, this emergency help come at cost also. The interest rate charged at the MLF is higher than the nominal interest rate set by the ECB. So it acts as a penalty. It acts as a penalty rate to discourage banks from over relying on this facility and to encourage them to manage their finances more prudently. This is like a short-term support, though the funds forward from the MLF are meant for very short-term period, and it's not long-term solution, but rather a way to bank to quickly address any unexpected shortage of cash. Control mechanism, obviously ECB can use this MLF as a tool to control short-term interest rates in the financial system by settling the interest rate of the facilities. And banks, when using this MLF, should be aware that it is a measure for exceptional situation. So if a bank is frequently relying on this facility, it might indicate underlying financial issues in the bank, and supervisor may take a closer look to ensure bank stability. So this should be also be part of should be out of the picture. Now covering MPO, which is monetary policy operation. Ordinary Eurosystem monetary policy operation. It involves ECB actions to manage money supply, interest rate, overall economic condition. So these operations have a direct impact on how banks operate, and it is going to influence their ability to lend, manage their liquidity, and contribute to economic growth in the eurozone. So this can be non-serious, and this can be non-serious, but those two were total serious items. And ECB use these various tools and mechanisms to manage the amount of money circulating in the economy, and this is going to be ordinary thing. Regulate interest rate, and one key instrument is very popular, as when we were kids we used to know about this. We study this item, which is open market operations, where ECB is buying, selling financial assets like government bond, adjust liquidity in banking system. How it works and how it's going to impact banks in EU in several ways. This thing, like for example, liquidity management, very popular academic basic theoretical things. Liquidity management. Bank need certain amount of cash to meet their daily operation. Okay, ECB operation influence availability of this cash in the banking system. By adjusting liquidity, ECB can encourage or discourage banks from lending to each other. Interest rate, ECB sets the main basic interest rate for the eurozone. So by influencing these rates, central banks can affect the cost of borrowing per bank. If, for example, if they are going to lower the rates, this will going to encourage banks to lend more, stimulate economic activity, while high rates can have opposite effect. Credit condition, obviously changing the monetary policy operation can impact overall credit condition also in the economy. If ECB makes it cheaper for banks to borrow, then they are more likely to extend credit to businesses and individual and foster. In this way, they are going to foster economic growth. And this way, by this monetary policy actions, ECB can aim to maintain price stability primarily by targeting inflation. The monetary policy operation helping achieving the goal by adjusting money supply in the economy, interest rate to keep inflation within a certain target range. So these are the three things which are very important to understand table 1A3. First is monetary policy operation, second is ELA, and third one is MLF. What are those lines? Rows 230 to 280. 230 is going to cover both. 230 is going to cover central bank funding. It is a sum of euro system central bank funding, euro system central bank funding plus non-euro central bank funding. 230, then 240, 250, 260, 270 are going to cover under this this ESCBF, euro system central bank funding, and 3.2, which is 289, is going to dedicate for non-euro system central bank funding, and this includes provided by the central banks which are not in euro system. So tada, thank you. By this we are going to end our video. In this video we have covered table 1A3 of section 1 of JLT reporting template. If you like this video, then good for you, and if not, then do let me know in the comment box. Take care, bye bye.